The Dow Jones Industrial Average down triple digits after scoring the biggest gain in 6 months yesterday. We're about 200 points off the session low, so obviously another wild session. Now, one stock bucking the trend, shares of Netflix, they are soaring after reporting solid subscriber gains that really blew away all Wall Street analysts. And by the way, in the process, they gave the owner of our company, Rupert Murdoch, a big shout out during the company earnings. To talk about all this, I want to bring in Mitch Rochelle from PwC and from Vision 4 Funds Distributors, Heather Zumaraga. You know, Heather, it's interesting because what Netflix was saying is essentially Rupert Murdoch is the only one who got it right. He sold these assets, these content assets for a big premium. He's sitting on cash, and the only thing that that Netflix cannot dominate is sports and news. Those are two events people want to watch live. Other than that, essentially, Reed Hastings is telling the world we are going to dominate.
That's right. Reed Hastings giving Fox a big shout out, saying that the business model of live news and live sports going forward is how other networks may follow suit, or they may become a dying breed because they're losing out to Netflix and other on-demand streaming services who have perhaps better content on demand whenever you want it and cheaper. So Netflix is giving a blowout quarter right now with subscriber growth across the world, most of that coming globally. I think most of their growth could come from Europe, actually, over the U.S. We had about 1 million in the U.S., but they are changing the way that we're watching TV, and that was a big shout-out for Fox.
Yeah, Asia, Mitch, is going to be huge for them as well, particularly India. And in near term, the issue that they're going to have, though, of course, is you can't charge the same amount that you charge in India or Malaysia or Indonesia, even though they could dominate those markets.
And from a licensing,
as you charge in America.
Right, and from a licensing perspective, they may not have identical content around the planet as it relates to previous shows.
Although when you spend $9 billion, you can generate I see some great Indian content on Netflix. I even catch myself watching some shows. I like foreign documentaries, so maybe, I like it, Heather. I watch them all the time.
Yeah, well,
you should see my lunchbox. It's inspired by an Indian movie.
A lot of Bollywood stuff.
Yeah.
But the fact of the matter is, content, as Heather said, is king. And it's not just Netflix. Look at all the streaming services and the reality that the cord is being cut. The thing to keep an eye on, though, is the cost of this original content. We're talking about numbers in the billions, and the competitiveness around creating new original content and doing it in a period of rising interest rates. So it's going to be interesting to see how that gets financed by these companies going
Let's talk
forward.
about the broad market. Let's broaden this out a little bit. It's a very interesting session because financials are leading the way right now, Mitch, and they have been a big disappointment. Even on Friday, J.P. Morgan, it was the worst performer on the Dow. The market was still able to rally despite that. Although yesterday folks were pretty happy with Morgan Stanley and Goldman Sachs, they're not necessarily living up to the hype. What's going on there? Even if we think interest rates are going higher and the market's reacting to that, why aren't financials doing better?
Some of it's yield curve related, because the yield curve's got to be in the right trajectory to make the borrowing short and sort of lending long and vice versa make sense for net interest margin. The other thing that they're looking at is what's happening, whether it be loan growth, investment banking, trading. They're looking at all the components of those different businesses and trying to figure out, in a volatile market with potentially slowing economic growth, what's that mean for the future?
You know, Heather, here's a thought. Why don't they start lending money? I mean, listen, when their trading desk is the majority of their income and their earnings, and they live or die each quarter depending on trading volume and volatility, that's not what banks were designed for.
Well, wait a minute. Yeah, but regulations have caused them to rein in some of that lending after 2008. I mean, prior to 2008, the banks were lending to almost anyone and everyone. And now, after 2008, Dodd-Frank and other regulations have made it very difficult for consumers to get loans or everyday average Americans to get a mortgage. So hopefully President Trump is actually going to cut some of that regulation if it's unnecessary and allow the banks to loosen their reins on making some more loans.
Yeah, let's take all the excuses away from the banks and make them lend money to at least the Main Street. Hey, Heather and Mitch, thank you both very, very much.